From Bloomberg World Headquarters in New York City, this is Evening Edition on Bloomberg.
All right, let's talk about something that was rather interesting here about mortgage rates. If you cut them, it appears borrowers will be just coming out of the woodwork. Mortgage applications jumped 48% last week. But applying is one thing. Getting that loan is quite another. Margaret Popper reporting on just how many loan applications get the stamp of approval.
When Felicia Jackson's mortgage broker, Positive Mortgage, called her to talk about lower mortgage rates, she was already worried about her payments.
My 30-year fixed was, I'd say, at about 6.75, and then my home equity, I believe, was at 8.1. So blended, they were well over 7, probably closer to 7.5.
Now Jackson is hoping to combine the two into a 30-year fixed-rate mortgage with a rate of 5.75%. But getting from the application to the mortgage is not easy these days. Mortgage Bankers Association data show in the first half of this year, about 60% of applications were approved. But the Mortgage Bankers Association's economic forecaster, Orwin Vels, says fewer applications will win approval now. Mortgage brokers like David Reischer at NationwideWholesaleMortgage.com say banks have made it much tougher.
The fact that mortgage applications are going up in no way indicates that, in fact, those will translate into loans that will actually close. In fact, there might even be some misinformation out there because people assume because mortgage applications are going up, therefore mortgages are closing. And it's not that. It's not the case. It's actually the opposite.
Let's say you're applying for a so-called conventional loan, one that would be guaranteed by Fannie Mae or Freddie Mac. These days, your credit score would have to be in the 700s. You'd have to have at least 20% of the home price as a deposit or in equity, and you'd have to be able to prove your income with documents like pay stubs and tax returns. Given that, a growing number of people are looking for FHA qualifying loans, about double the number from a year ago. But don't be fooled by the lower credit score and higher loan-to-value. These loans are even tougher to get than conventional loans because the monthly payment can only be 31% of the borrower's monthly income. One of the toughest hurdles, say bankers, the size of the loan compared to the home value. As home prices have fallen, a lot of people find they owe more than their homes are worth. At the end of October, that was about 18% of all borrowers, says Sam Cater, chief economist at CoreLogic. Cater says that number is now probably about 20%. 1 in 5 of all U.S. mortgages are what he calls upside down. Between the upside-down mortgages and the tougher standards on credit scores, brokers are turning away clients.
Out of the 10 people that call in, you can probably get like 3 or 4 applications, and then I would say about half of those are actually translating into loans.
Felicia Jackson's broker, Positive Mortgage, reached out to her for the refinance. She's hoping that gives her a better shot at getting the loan.
I gave him all of the initial information that he needed so that he could go out and do his research and due diligence and come back to us with the best rate that he could find. And we actually had a conversation with him yesterday and learned about what our new monthly payment would be, what the new interest rate would be. And now we're at the point where we need to provide all of the official documentation. So I would say that we're at the point where we are pre-approved for the new mortgage, and we just have to follow up with all of the official documentation.
Margaret Popper, Bloomberg News.